what is it going to take for Allergan stock to make a comeback? This drug maker, a former darling of this market, has spent years in the doghouse, thanks to worries about slowing growth and patent expirations. But in the last few weeks, the stock, which sells for just 10 times earnings, has started to rebound. Can it keep climbing? Earlier today, we checked in with Brent Saunders. He's the chairman and CEO of Allergan. Find out where his company might be headed. Take a look. Brent, I've got to understand what's happened here. A few years ago, your stock was worth $100 billion. Now it's worth $46 billion, and yet you have more drugs in the pipe, and you've got a much better crew of leadership, 4 key therapeutic areas. How could it be cut in half? And I'm not talking about the Pfizer deal. I'm just talking about the valuation while you've got so much that's better than it was 3 years ago.
Yeah, look, I think our company has been misunderstood. Maybe some of it was some unforced errors we caused, and maybe some were just market-driven. The reality is you have to look at the underlying operational performance of the company. In 2018, 3/4 of the year in, which is what we've reported, the core business grew 7.7%. That's 90% of Allergan. We have now 12 programs in phase 3 development and almost 60 other earlier to mid-stage programs in development. We have a great company. We need to do a better job showing that to investors and other stakeholders.
Well, go over the unforced errors. I want everyone to recognize that they could be history.
Well, I think people didn't fully appreciate when Restasis could potentially go generic. We haven't seen it yet, but clearly we've lost the intellectual property around that, and so that is imminent, and that's almost $1.5 billion product. On top of that, as you know, Commissioner Gottlieb at the FDA came in and really did the right thing and created more competition for generics, including complex generics. So we lost about another $1.5 billion of branded products. This all happened last year.
Right.
It's almost in the rearview mirror for us. But the core business, once you strip away those products, and we'll annualize them soon, is really healthy, really robust, and the team at Allergan is doing an amazing job.
Now, you made some acquisitions. Not all of them have panned out.
Well, most of them have.
Okay.
And look, if you look at the quantum of deals we've done, and I've been CEO for 5 years, my 5th anniversary was just a couple weeks ago, we've done over $100 billion of deals. I would say the vast majority of them have worked out. Not all of them have, not all of them ever will. That's part of the risk of doing M&A, but the vast majority of them have. And so we feel good about it. We've learned a lot from the ones that haven't. We review them, we talk about them openly, but really we're focused on building a great company that's going to win in the 4 therapeutic areas where we compete.
All right, let's talk about those, because now we've got that the negatives out of the way. But I want to first talk about aesthetics, because I've got to tell you, I think this is the great payer. It has nothing to do with United Health, has nothing to do with Medicare. And the Botox franchise, there are people who say that it's challenged. I think the challenges, frankly, are nowhere. Do you agree?
I do agree. Look, medical aesthetics, in my opinion, is the best business in the biopharmaceutical space. You just said it. It's highly durable. It's cash pay all over the world, and it's less regulated, and so we don't have to deal with government payers anywhere in the world. It's growing. It's a growing market. We believe it will double over the next couple of years, and we are the market leader in every segment we compete with the best brands, whether it be Botox, Juvederm, Colescoping, so on and so forth. So when we look at this market and our position in it, it is an amazing business, and our team is doing just a great job.
Not getting any credit, I think, for what you're doing. Migraine or major depressant, I think a lot of it is people don't believe. They don't believe that there could be an acute pill, but you're getting some good results.
Well, we've gotten all the results, and now we're in the process of filing with the NDA or the application with the FDA and governments around the world. So we know we have it. We know the risk benefit is incredibly positive, and we should be launching it towards the end of this year or early next year. So we will have the best migraine portfolio. We'll have Botox for chronic preventative. We'll have the only pill for acute treatment, and then we have an oral CGRP for prophylaxis coming the following year.
And so explain for people in English, you're talking about, you think one's coming on, you pop it. This isn't Excedrin migraine. This is something that works, right?
So what launched last year was these great innovations, these CGRPs. They're injectables. They're shots or IVs. They're used to prevent migraine. You have to take them every month or every 2 weeks for the rest of your life. What we have is a pill you take on demand. And so you feel a migraine coming on, which we're most people are pretty used to doing. They feel a headache coming on, they take a pill. That's what we have. It's a novel CGRP mechanism, and it should work great.
Amazingly, both eye and GI tract, no one talks about them, but they're good franchises.
Yeah, so we're the world leader in eye care in the pharmaceutical industry, both front and back of the eye. Restasis was for dry eye, but we are the world's leader in glaucoma. And then in back of the eye, we are moving very rapidly into areas like wet AMD, geographic atrophy, where there's no treatment for patients whatsoever. This could be an amazing breakthrough, as well as gene therapy and gene editing.
Well, I've got to tell you, if I had an actual pure play on medical aesthetics, I think it would be worth the price of your company. And yet people keep saying he's not doing anything transformational, not doing anything transformational. Have you ever thought about the idea of giving us a medical aesthetics company and then all these other fantastic drugs that are going to revolutionize mental and revolutionize eye care?
Look, we do think about it, and our board of directors thinks about that regularly. The issue is Botox is the anchor brand in medical aesthetics. We sell more Botox for therapeutic, like migraine or overactive bladder or spasticity disorders, than we do for wrinkles. And to break Botox apart, to break a brand of that power, of that strength, right? It's ubiquitous. It's an eponym for the procedure, would be value destroying today.
But Brent, there are drugs that you have in the pipe that I think are monster drugs. And a lot of the companies that I've seen out here are saying, listen, we want to put these high growth drugs in a different silo from things that just are good, solid growth. People keep wanting this from you, Brent. Why can't you create the value that they want with a pen?
Because, first of all, to separate a company is a multiple-year process. Other companies have done this, have talked about it. It's taken them 2 or 3 years. So it's not a quick solve solution. Second, we don't believe today that's the right thing, but it may be tomorrow. We always are evaluating the opportunities. We don't have scale outside the U.S. It would be very expensive for us to do. We still have $20 billion of debt that would have to be divided among the companies. That would hurt the debt holders. There are other complexities to this than just simply saying split the company. That being said, we're always looking for ways to create value. I have done many transformational moves. I'm not afraid to do it. It's just not the right time today. We will solve the growth issue by lapsing the LOEs or the losses of exclusivity, and the underlying core business, as I said, is growing, and the pipeline looks very encouraging.
All right, thank you so much to Brent Saunders. He's Chairman, President, and CEO of Allergan AGN. I never thought I'd see the stock down here, but maybe that's why it might be real interesting to buy. Stay with me. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.